Only mode.
Hey, hello, active traders, and welcome to How to Trade Winning Breakouts and Pivots with myself, Ken Calhoun from TradeMastery.com, and my longtime colleague, Steve Nison from CandleCharts.com. Hey, Steve, it's great to have you with us here tonight.
Great always joining you for these exciting webcasts, I should say.
Yeah, it's good to see so many of you registered. Hundreds of you from around the world registered for tonight's event. We will have the replay on my YouTube channel and at the top of the page at StockTradingSuccess.com as well. But you may want to ask questions tonight, so I encourage you to stick around. As always, all information is for information or education use only. We're not making advice about what to buy, sell, or hold, and by watching this, agree not to make actual trades. Hey, Steve, I saw something here before we jump into the PowerPoints. I
Okay.
know you always talk, here's the S&P on a 15-day, 15-minute chart, and you always talk about the wisdom of using candles for early reversal signals, and today was no exception, right? I learned this from you. People could have panicked out on the gap down today, but if they saw this hammer, they would have stayed long and been right today because the market came right back nicely off this hammer low. Does that
Right.
make
And
sense?
and equally important, if we go back a couple of days, it looks like October 12th. Keep on going to your left, to your right a little bit. Look out what else we also had there.
And it,
Another hammer.
yeah, and it confirms
Right.
support. Perfect.
Exactly. Right. So when you have a candle signal confirming another candle signal, or even a candle signal confirming a support area, even if that support area is not based on a candle signal, the odds of return are much, much higher.
And see, that's smart. That's something I didn't pick up, so thanks.
Mhm.
That would have been something to be on the radar to watch out for, right? Is, hey, here's a hammer. Are we going to lose that support line significantly, yes or no? And since we didn't and have found support there, that would not have panicked longs out of their positions had they interpreted the candles correctly, thanks to what you teach. So thanks. It was a good technical save for the markets today. So anyway, let's get underway with tonight's event. I will be doing the first 20 minutes, and then Steve will be doing the next 20 minutes, and then we'll be talking about a brand new 2-for-1 special we've got going for our stock trading success system, favored by hundreds of active traders around the world. So for those of you who are new to working with me, you may have seen me as a regular columnist the last couple of years in stocks and commodities with my Trading on Momentum column. It's always popular, and you may have seen me as a money show speaker at the Traders Expos and money shows. I'm a real money trader. When I was getting really excited one year, I traded almost $5 million worth of real money trades. Small profit, but still I put on lots of trades to test out different patterns. And the results of those tests are what I teach traders in this system and my other system. So I'm very active about testing out with real money trades. Put my money where my mouth is so you guys can learn what works and what doesn't as I take point and try and figure this stuff out for you. So what you'll learn from me in the next 17 minutes is how to look at the strongest swing trading patterns, how to avoid false breakouts, how to use wide range candles, cups, and gaps, and how to enter ADX over 40. And one of the things that I think it's been very popular is how to use ADX. I wanted to get you up to speed on that first. We're going to lead off with ADX. Before we do that, a few quick tips here, kind of the last PowerPoint for a while. I want you to consider one of the biggest improvements I made in my own trading was when I started trading smaller positions and more of them. That gives you more occurrences, as Wall Street guys would say, or floor traders. So you want to get yourself in front of as many good, successful trade setups as possible, and then scale in by adding to all winning trades. And for swing trades, if there's a 2-day reversal, say a 2-day low in the candlestick chart, we want to get out of the trade. So let's start off with one of my favorite patterns. It's been a long-time favorite for a lot of my traders is a simple ADX over 40. Wilder's average directional index, I just use the signal line, the red line. When the ADX breaks over 40, that tells you you've got a very volatile chart. Okay, the ADX, average directional index, is a volatility barometer, and it tells you of emerging volatility. Odds are you and I are going to miss that day, but that's okay because as long as we stay over 40 or recover over 40, we're likely to see new breakouts up at new highs. So this simply puts something from a scanning standpoint on your radar that you may have a volatile chart that makes sense to trade. And I'll often go in on a subsequent day after the ADX breaks over 40 and holds over 40 at 50 cents or so above the high for a swing trade. Another core strategy to look for are large green candles, good signal candles, or a good ratio of green to red candles that tells you buyers are coming in. So that's a quick writer downer for ADX. Plot your ADX with the standard 14-step parameters. That's what's standard in most charting software. I use eSignal myself, but I also train and trade on TradeStation and Metastock and Ninja and some of the others out there. So the point is ADX over 40 tells you the heat is on and you've got volatility emerging. Also, if you're a directional options trader, and you're looking at implied volatility and time decay and the rest of it, you want to look for charts that have a good ADX signal to get you jump started in something that has a good shot of hitting your strike before expiration. So as you're looking for ADX and other volatile signals, I want you to start off by looking at some of the very strongest momentum charts. And what I want to start off tonight with is how to trade some of the strongest patterns. My favorite is always going to be a window or a gap up continuation. That's my signature play. And often what you'll see is a mean reversion, meaning you'll see a gap up that runs up a bit. It retraces to a Fibonacci or around, this is slightly more than 50%, but somewhere in the ballpark of a half range. And you can see from the close, it was a mean reversion. It moved up here, pulled back to half, and resumed its trend. What that means to you as a trader is you got a second shot at a trade. So oftentimes, a lot of my traders, my students will tell me they miss out on a big gap day, what to do next. Well, rule number one is thou shalt not trade the day after a gap, because often that's a reversion day or a resting day. Often you'll see a large green candle day followed by a doji or flat melted candle day. And from a price action standpoint, if you're trading windows, if you don't catch it the day of the gap, which is fine, it's still worth considering for a day subsequent to the gap. So that's another quick tip for trading gaps. I've got 10 charts, and what I scanned long and hard this afternoon for you guys to find some really good charts. And again, these aren't trade recommendations, but these are all rock star charts that you may want to keep on your radar. So tonight's event doubles as a kind of a heads up watch list session as well. One of the things that at least I found over many years in trading millions of dollars of stocks for mainly swing and intraday trades, I don't do much position trading. But if you have a nice tight channel and a continuous uptrend, those type of charts often make for the best trade setups because they're easier to scale into. See, the trick about position sizing or scaling is that if you have charts that aren't consistent, if they pull up and then they pull back, you may scale in and then get stopped out and then it runs up without you. So when you're looking for the strongest patterns out there, I want you to look for price action that's consistent. One of my favorite patterns that I teach at my money show appearances is what I call an acceleration ramp. And you can see DHI shows you a little bit of that today. It's where you have a steady uptrend that slowly, often it'll make an ascending triangle type of a pattern. And this is kind of a long ascending triangle, but it finally breaks to new highs. And the trick is it needs to be in a pre-existing uptrend that then gets a nice high volume breakout. And if you look at the 90-day, this is a 15-day, 15-minute candlestick chart. If you look at the 90-day daily chart on this, it shows you one of my favorite patterns, which is a large green momentum candle in the upper right side of a 3-month and 90-day chart. You see a bullish engulfment here. It ran on up. You've got a steady progression of increasing whole real body heights with increasing volume. So volume and price action together makes sense. I don't know, Steve, anything jump out to you on this particular chart? Because I published on this. I like this. So you got a baby bear, mama bear, papa bear. Not quite a 3-line break. It's actually the continua or the Starbucks coffee sizes, whatever those are, large, venti, grande, whatever. You got small, medium, large candles plus increasing volume. So you got convergence of price action and volume, and that's good for another, 4 points to the upside.
Yep, exactly. And, one of the things that people who are kind of familiar with candles may recognize are the doji that we've had, it looks like a couple of days ago. But doji aren't necessarily negative, because when you get a doji, the trend turns from up to neutral, not from up to down. And we could see what happened as the real bodies got smaller and smaller. We went from higher highs and higher lows to about the same high. And while that could be a sign of a diminishing of the bullish force, it also helps relieve the overbought condition. So while the market got, look at the rally from 37 to 41, and very, very quickly, the market, in my opinion, got overheated. And by trading laterally, the market is telling us it got comfortable with that price. So if the market does break out, and we've had sessions about momentum breakouts, momentum trading, that could actually be very healthy because the market really is not overbought now.
Yeah, that's a good point. Yeah, oftentimes you never want to be, I always teach traders, you never want to chase anything. So if it's been running up forever, or it seems like it, you don't want to try and chase it because often you get a false breakout. So it's good to see either a congestion or a small pullback that then maybe as it hammers out a low or bullish engulfment that then takes out new highs and skyrockets on up, kind of like LA wave 1, 2, 3, and the rest of it. So yeah, good point. And so when you look at these candlestick charts, one of the things that I like, especially this is a rider downer, folks, on the 90-day daily candlestick chart, look for patterns that have nice tight, like this MXIM chart, MXIM. Is everybody with me on this? Do you see how clean and tight, and with the ratio of green to red candles is mostly green, and we got a good steady tight breakout with a 45-degree angle continuation run? One thing that I teach traders is to not buy nines. That's another quick rider downer. That's a sell target. I will rebuy usually 50 to avoid false breakouts. I will usually use 50 cents or so above the nearest whole number high. So in this case, I would not be re-engaging or rebuying this position unless it breaks north of 50.50. But this is a good example of an uptrend continuation. It pivoted nicely off of the 100 simple moving average. And these moving average lines are there for a reason. They tell you, if you have a large green signal candle, that'll often get a jump start on price action. You often see a engulfed pattern where you get a large candle followed by a small candle. That's why we don't buy the day after gaps like this. We had a little gap up and a flat day. You don't trade the day after a gap. Instead, you wait for a bullish breakout. And oftentimes, when there's so much to teach, a bullish cup looks like this. We had a shooting star right there. Okay, so that shooting star, obviously we don't want to, you can't, thou shalt not buy in here. The fact that this had a green candle here put it on my radar that it may be good for a recovery play. And as a breakout trader, I will still wait until slightly above the nearest whole number, say over 48 and a quarter or so. So a bullish cup looks like the letter V or the letter U. Always expect a handle or a false breakout at the right side of a cup. So, or any congestion breakout or consolidation breakout. So I always add a safety buffer. You may have seen my articles in Stocks and Commodities, or back in the day in Active Trader magazine, 40, 50 cents above the obvious public money resistance area to make sure that it does have enough of a continuation play before getting on board. And then, full steam ahead, and this guy charged on up to 50. So those kind of charts can really go a long ways towards helping you avoid false breakouts, as trade strong trending charts with good price action populated by large green momentum candles. And I don't buy bounces and pullbacks. I just buy new highs with the safety buffer included so that we stay clear of it. Now here's a good example of an exit signal. Even though we didn't see any classic candle, actually this might, I don't know, Steve, is this a bearish engulfing? I don't know for sure if that is or not, but I see two red candles.
Yeah. Yep. The red wrapping around the real, as long as it's real body, real body. So it's a black real body wrapping on the white real body. Yep. And it's also confirming a resistance area.
Right. Yeah. Previous resistance there. So, okay. So we got the voice of the East is the bearish engulfing. That was the early sign, which was the exact top. And what I look for, another thing that you guys might want to consider testing is whenever I see two red candles in a row, a loss of two red candles, that breaks the trend to me. Two red candles in a day, and I'm out on a loss of the support. So if you struggle with where to put stops, it would be the same as the candlestick interpretation of a bearish engulfing. A loss of support would indicate a stop. Also, in this one, we had two red candles. And often you'll see things like a shooting star makes a red shooting star candle, and then another red candle following slightly lower, and then a collapse in price. So that's another exit signal is, if you see a bearish engulfment, or you see a shooting star, or you see two red candles, that'll get me out of a trade. I'll put a sell stop here, and then I'm eager to buy back in up over, say, 50 cents above the nearest whole number high. So for all of you paying attention out there, and hopefully that's hundreds, where would you put a long trigger? And it's conservative because we see some bearish sign. We do not buy 33.50 on a recovery because that's going to be a very risky region. Between 33.50 and 34 is likely to be a false breakout region. And if you've taken as many hundreds of false breakouts as me and you learned the hard way that that's really frustrating to have to explain to your family why you lost hundreds of dollars in a trade, stop the madness. There's got to be a better way. as one of the sharks would say. And in my trades, I learned the hard way that you always want to put a false breakout, I'm trying to draw an X up here, a false breakout filter right above the high. So 34.50 would be the earliest I'd put it along. I know that's conservative, but I want to get on board the train if it continues to run up sharply, not in an indecisive area where they're battling it out between buyers and sellers at a key resistance zone. So that's a core strategy, especially with volume confirmation. If the volume on the day prior was up at 10 or 12 million, that would be a good volume confirmation for a breakout. A few minutes left here. Here's another one, TROX. Let's pop down to the 15-day charts. That's a acceleration ramp pattern. We talked about wide range candles, cups, and we touched on gaps. Here's another gapper or window pattern in SOHU, S-O-H-U, a gap from 56.50 all the way up to 60. Often you'll find, and I teach this a lot in my training, is you find whole number or decade value, especially resistance. That's why I say thou shalt not buy nines. Here, I just saw this for the first time and it proved my concept again. Don't buy anything with a 9 in it. I put an article, I had 2 articles in Stocks and Commodities, one on swing and one on day trading on that topic. You can trade within. For day traders, we trade within 1-point ranges. For swing traders, you can trade within a delta of a 10-point range. So somewhere north of something that's a multiple of 10, like 60.5, with an exit target of 69. But never, ever, ever, ever buy anything with a 9 in it. That looks expensive. That's part of market psychology. People are driven by psychology, and 9 looks expensive. Also, self-fulfilling prophecy. So many tens of thousands of traders have read my writings and talking at money shows on this the last 17 years. It also helps fuel the fire that you shouldn't buy anything with a 9 in it. That's a good exit target. Like Weight Watchers, if you remember that stock, it ran up to 39 before stalling and dropping sharply. So don't buy 9s. That's another way to avoid false breakouts. Buy the low values, the $1, $2, $3 above a decade point with an 8 or 9 exit target for a swing trade. Now we're in a decline, so I'm completely uninterested in this guy unless it breaks north of, say, 71.5. That's again, not a trade recommendation, but that's the earliest I'd get in long in SOHU. And I've got just a few minutes left here. I've got a lifetime of experience to pack into 20 minutes. Another quick writer downer for gaps or windows is what I call my 10% rule, meaning expect a gap continuation if the magnitude of the gap is less than 10% of the price. So for a $39 stock, that would be just under $4. That's kind of a large gap, but this guy only gapped up just less than a point, or just about 1 point exactly, and it continued up. So if a $50 stock gaps up to 53 or 54, I'll buy a new high. But if it gaps to 58 or 60, I will not. So often you'll see a reversal or a gap fill if you're in excess of 10%. But less than 10%, you often get a gap continuation. So that's another good chart pattern here. And another play for counter trend traders, VXX, if the stock market does eventually sell off and drop, and you'll learn how to trade these kind of patterns in the stock trading success system once you guys all order that, which we'll be telling you about soon. But one of the things you want to look for is playing the inverse ETFs, and you can use the patterns that you'll be learning for that as well. So if the stock market does sell off, don't worry, I've got your back. Well, we've got a potential reversal in our VIX and other inverse ETNs. If the stock market drops, you can play these guys to the upside, because when the stock market drops, this goes up. When the market goes up, this goes down, kind of like the inverse relationship with gold. But the main takeaway from today is to look for the best of the patterns. Remember that ADX over 40 signal. When ADX comes from below 40, pierces and holds over 40, often a good breakout trigger is found above the high of the day in which that ADX signals a 40 breakout. Again, I do not use the DMI lines for this. I just use a simple red ADX 14-step parameter to yield my buy signals. So anyways, good stuff. Let's see what else. I think that's about it for now. Let's see. Let me go ahead and turn it over to Steve, and wanted to thank all of you for being here. Steve will cover the next 20 minutes or so, and then we will come back together and tell you a little bit more about how you can apply these kind of patterns and this thinking process. You know, I hire a lot of coaches. I spend a small fortune happily on good coaches. The trick is finding good coaches like Steve Nison, right? People who know what they're talking about, or world top experts like Steve. when you learn from a coach, learn not only the techniques and the details of the strategy, but also learn the strategic thinking or their philosophy or their approach toward things like risk management and trading and how they would approach a specific trade setup. And that's one of the things that you'll learn about in the stock trading success system as well, is a specific rules-based approach that makes a lot of sense. So with that, let's turn it over to Steve Nison, the world's top expert in candlestick charts, and happily working with Steve for over 15 years now. It doesn't seem like just yesterday. It's been a long time, but 15 years, and it's been great working with you. So let's turn it over to Steve.
Great, thank you so much. And here was a nice quote I got from somebody who used our research. Everyone that teaches candlesticks quotes the master. Why not go to the master? And that's why Ken and I work so well. We're both masters in our fields. I immodestly say that. I in candlesticks and Ken in intraday trade setups. And what I'm going to show now is just some ideas of what you'll be getting on our resource. Ken will talk about a little bit later on, the stock success system, stock trading success system. And if we go to the next slide, okay, I go into a lot of details on the full package, full educational package. But essentially, as valuable as candlesticks are for early reversals, they work even more on a timely basis when you're looking at intraday. And part of the reasons are shown here in these bullet points, and I'll show examples in my portion of this webcast and video. So you're going to get earlier reversal signals on an intraday chart than you normally would do on a daily chart or see on a daily chart. And sometimes, as Ken pointed out before, there was no hammer on the daily chart for the S&P, but on, I think it was a 15-minute chart that he showed at the intro, there was a hammer that showed us a prior hammer a couple of days ago, but there was no hammer a couple of days ago on the daily chart, but there was on an intraday chart. Now, also, sometimes the market may be viewed as overbought on a daily chart or oversold, but on an intraday chart, it may not be, because the market could be digesting the gains on an intraday basis. So in other words, say a market rallies, or let's say from 10, and again, I go into a lot more with real-world examples on the full resource, but just to give you a sense of what I'm talking about using intraday to get a sense of overbought, oversold. So let's say on a daily chart, the market goes from $10 to $20 in 3 days. And you say, wow, the market's rallied really fast. It's not going to continue rallying. I think a lot of people who are long will probably be nervous, and maybe the market will correct. It's moved up too far, too fast. But what if on an intraday chart, for hours and hours and hours, say the market gets from $10 to $15 and then trades for hours at $15? The market is actually digesting the gains, and you could see that on an intraday basis, but it may not be evident on a daily basis, on a daily chart. And what does that mean? That means those who are thinking about getting out just because what looks like an overbought market on a daily chart may be missing an opportunity to keep those profits going, letting them ride. We all have this ingrained, I don't want to say fear, but we all want to run with profits, and that's one of the challenges, letting profits run. So by using intraday charts to get a sense if the market really is overbought or oversold, you can know when it's time to think about locking in profits. And we also go over secrets of using daily charts, because intraday are great, but there are times you should also add daily charts to increase the likelihood of a reversal being confirmed on an intraday chart. So let's look at a couple examples of some of these bullet points. So as I mentioned here, as shown here, coincidentally, there's another hammer. There's not the S&P, but here we have a hammer on a daily chart. Now, one of the downsides to a candlestick chart is you have to wait for a close. Remember, you need open, high, low, and close. And so obviously on a daily chart, you have to wait for a close. So here, by the time we got the hammer's reversal signal, i.e. the close, is a little above $53. However, on the same day that the market made a hammer on that daily chart on the left, on the right, we have an intraday chart. This happens to be, I think, a 60-minute chart. And notice there's also a hammer. So it's the same pattern. And for those familiar with candles, you know a hammer could be a black or white real body, so they're both hammers. So it's the same candlestick signal, but because all we need to do is wait for a close of an hourly chart on an hourly basis, we actually got a bullish reversal signal $4 earlier on the intraday chart than we did on the daily chart. So if you're looking at 100 shares, you're looking at $400 extra potential profit by using the intraday chart. Let's go to the next slide, give an example. So here, there were no key reversal signals right around, and this happens to be Google, right around the 667, 668 area. No bottom reversal signals with candles. We could see the market was tending to stabilize with the same lows, but nothing really bullish based on the candles. No hammers, no bullish engulfing patterns. But let's go during that time period where the market was kind of building the same base right around 667, and we're looking at a 30-minute chart. Here we have a plethora of signals based on the intraday. We have a hammer, we have a bullish engulfing pattern. So here we had many candlestick signals giving us visual confirmation of key support just before the market rallied $50. So once again, getting hidden reversal signals that you would not normally see on a daily chart. Okay, so if we could go to the next slide. Same concept here. Okay, no real reversal signals, maybe a little bullish engulfing pattern, a piercing pattern, but we don't get a sense of the solidity of the support. And we go to an intraday chart, once again 60-minute, and I'll normally, when I'm looking at intraday, I'll look at 15, 30, and 60-minute. Ken will look at all intraday time frames. He's the real expert on intraday. So here we have a group of signals. The little bullish engulfing pattern on the first blue arrow, another bullish engulfing pattern on the second blue arrow, a hammer on the third blue arrow. So session after session after session, we get a sense of how solid the support is. And what's great is we have a clean-cut stop-out area. Any close, I would say under 285. If you're long, you're wrong. So here, again, the intraday gives you a real sense of the solidity and the firmness of that support area. Now, one of the great things with with intraday, is there'll be many times that you will get hidden support or resistance. And this is a wonderful example. So on this session, on this day, the market had a really tall white candle. And we look at this chart. This is a daily chart. Where would we have support? Okay, I think it would be pretty obvious. It would be around $7, $8, right? But that's a long way down. That's $5 lower. So one would not think about buying here unless you want to risk $5. What I'll do in instances like this, if there's a tall white candle, I will look at an intraday chart to see if there's a support area that is not evident on the daily chart. So what we're going to do is look at an intraday chart on April 15th and look what we got here. Okay, a support area tested many times right around 82, 81, 80 in that area. So now we know by the end of the day of April 15th, based on the daily chart, our support area looked like $78. But on the intraday chart, by finding this hidden support, we now know our first support area is close to 82. And let's see what unfolded in the next session. So here, back to the daily chart, and look how the market held support right around $82. There's no way you'd be able to find that support area in the daily chart. Traders who don't look at intraday charts say, why did 82 hold? I don't see anything over there. But by getting those secrets of the intraday chart, getting that hidden support area, we found a potential buying zone where that many traders would likely have missed. Now let's look at the next slide. So here, same concept, using intraday charts to uncover hidden support. So on this session here on the blue arrow, where's first support? Once again, we would look at on this daily chart, the recent low is right around 22. All right, so that's a big percentage. In the dollar terms, it's not much lower. It's maybe $1.50, but in percentage terms, that's a big percentage to risk. So what we do now is look at an intraday chart, and on that same day, we now know there was a prior resistance area. And one of my favorite strategies is what I call change of polarity. Again, I don't have time to go into detail on this in this brief video and webcast. You'll get a lot more nuance in the full package. But essentially, an old resistance area, if solid, should become support. Once the market breaks above it, it should become support. So now we could see that based on the change of polarity, 2340 is a potential support area. And if we go back to the daily chart on the left, you could see where support held the next day, 2340. Once again, that is not something you would see on the daily chart, but it was perfectly visible, very evident once you know the strategies of intraday secrets like this by using the change of polarity. Great buying opportunity. Now, also, one thing that common misuse of candles is not knowing when to exit. So if we could show the next slide. So one thing we're going to look at is, and we know this bull market, everybody's talking bull market, bull market, bull market, and at some point it is going to end. And when it does, there's going to be a big fall. Fear is a much greater, stronger emotion than greed. We know that from all our experiences. Once the market starts falling, it falls hard. There's great profit potential made in bear trades. Also, we want to know when to exit, because if you exit correctly, you then have money to get back into the market and have a great buying opportunity. So, for example, for those who got out, let's say I'm just using an example here. For those who got out in the stock market in 2008, before it fell 50%, if you were not in the market, if you got out of the market in 2008 when the market hit a low in 2009, you then had all that money instead of losing. If you held on to your portfolio, the market comes back, right? From 2008, 2009, then ultimately comes back and makes new highs. But if you got out 2008, instead of losing 50% of your money as the market hit low in 2009, you now have all that extra money to put into the market when it makes a low. So, I don't want to get into all the nuances there, but essentially, if you get exit in time, that gives you extra funds in your portfolio to really take advantage of the market as it begins to rally. So let's look at here the S&P. Obviously, this is a couple of months ago when the market sold off, but just to give you a sense, and the reason I want to talk about this is so you are prepared, you'll have the education in our full resources to know when to consider exiting the market. So here's an example. A couple of months ago when the S&P, the market had that big fall, and this was back actually in 2016, had the big fall. This is actually a shooting star. And in this area here, we had a reversal signal. And then we see the market kind of stalled. Now let's look at the intraday chart. So here we saw some resistance right around 2,200. Once again, we made two highs over there. Let's get the intraday chart during this time period. And on the 30-minute chart, look at what we also had. On the left side, we had a bearish engulfing pattern, then following that a dark cloud cover. And don't worry if you're not familiar with all these candlestick signals. We go step by step on each individual candlestick signal we discuss in the full resource that Ken will be talking about a little bit later on. But bearish engulfing pattern, many of you know, black wrapping around white, a dark cloud cover. Then we had a shooting star. And then interestingly, we had the market rally. If we go to the right here, we have that tall white candle. Bulls are in charge. And then that small black real body, that's actually a bearhotomy, confirming a resistance area. So the key is we had confirmation of resistance on the intraday chart, and also resistance on the daily chart. And this is when you have different time frames coinciding where the odds of a turn are greatly increased. And if we go to the next slide, so, I wanted to show you there are ways to take advantages of bear markets. It's a little hard to go short in equities. Obviously you could use ETFs. So one of the things to look at is inverse ETFs. If you go to the next slide. So you can consider, on an intraday chart also, as the market goes down, you can use an inverse ETF to increase, the profit in a down market, because it is hard to, go short in actual equity. So you're going to be learning strategies from both the long side and the short side. And just keep in the back of your mind, when you learn those strategies from the short side, you'll be able to take advantage of those, especially in the ETFs, which are so popular now. And should we discuss the bonus that I'll be giving now, or should we discuss it later, Ken?
Now it's fine. Yeah, go ahead. Go for it.
Yeah. Okay, yeah. One of the things that we found extremely valuable is anybody who invests in the stock trading success system. I'm going to invite you to a private webinar with me where you can ask me about any U.S. market of your choice, and I will give you my outlook on it. I'll give you support and resistance, my strategy, things to look out for, the technical signals I would suggest you look at. And what that means is you could use this information for a potential trade setup, the very next session. And when we do when we do private webcasts like this, we normally charge anywhere from $200 to $300. Anywhere from from $297 to $397 for this. It's kind of a custom one-on-one, almost like a one-on-one advice from me. So that is a special bonus. And also, as another special bonus, if we go to the next slide, over my 30 years, actually more than 30 years of using candles, I'm going to show you my favorite, what I call Nison trading principles. And these are not just candlestick principles, but these are principles that I have found that work extremely well, not only in my own trading, but when I used to give trading strategies to top financial firms prior to revealing the candlestick secrets to the self-directed trader and investor in the retail side. I used to only reveal these to private institutions like Goldman Sachs, JP Morgan, and so you'll be getting access to my favorite trading principles honed by my many, many years of experience and insights into the market. Okay, so over to you, Ken.
All right, great. Great job on that. Is everybody with us so far? Do you see the benefit of using intraday, or at least flipping down? What I do is when I'm swing trading, I will also look at these intraday patterns. I'm not just looking at the daily chart for major directional trends, but I'm also looking at the intraday so I can stay out of trouble and not collapse trades too soon. Now let's take a look at what we've got lined up for you, because I think you'll like this. This is our premier system that's been enjoyed by hundreds of traders worldwide. And if you have any questions, feel free to ask. So thousands of people have trusted Steve and myself, and we've been working together for nearly 15 years now because we help traders as a team. Kind of our combined techniques show you the best of both the East and the West. Profits can potentially go higher with both of us working to help get you from where you're at to where you want to be as a trader. And one of the things that I think so many hundreds of traders have found valuable in this system is the fact that not only are we both genuine experts who have proof that we have actually had some degree of success, but also we've got a lot of resources to cover for you. Now, we've covered a lot for you, but there's two problems. Okay, the first is you'll probably forget all this stuff. The older I get, the more I forget things, and so you'll probably forget most of what we covered tonight unless you have an ongoing resource to help you. And also you need the tools, meaning the specific strategies and techniques. We've given you a quick overview of some very intelligent thinking about how to manage your trades, trusted by thousands of traders, but you really need the tools to make this work for you. Which brings us to our stock trading success system. Now, in case you haven't seen the website, it's at stocktradingsuccess.com, and let me go ahead and post that in the chat box here so all of you can least bookmark the page, www.stocktradingsuccess.com. And I put together a nice headline, accelerate your ability to take advantage of real-time stock marketplace. But the best headline is from our friends at Stocks and Commodities Magazine, the world's preeminent resource in terms of a publication for active traders. And Jayanthi, the editor, said, by the time you're done with all dozen DVDs, you will certainly have gained enough knowledge to trade for a living. And I can't say it any better than that, right? So it's great to have an impartial third-party review saying it's enough to trade for a living. What's impressive is not just me and Steve talking about it, but all these over 100 traders sharing their success stories. So, and Steve, any comments on this? I know we've even got video testimonials too, but to my knowledge, and I've been around since the 90s, as has Steve, this system has more honest, heartfelt testimonials from active traders just like you who've really found value in this, more testimonials than any other system I've seen in the entire stock market. We have over 100 testimonials. These are, you can read them. You can see all the difference that it made in these people's lives. And that's the best, persuasive element is, let the market talk. Let the traders tell you what kind of a difference. Because it's really amazing to read the turnaround stories that people have reported. And although we can't promise that you'll get the same results that they do, we can promise that it's world-class training. But Steve, any thought on the testimonials? Because that's social proof. That's over 100 people, and we've had hundreds order the system, tell the world how much it's been a help to them. That's what we call our wall of. We fondly call this our wall of trader testimonials for the stock trading success system.
Yeah, it's interesting. You see these TV commercials, like people losing weight, and they'll have like one example, or somebody who says, "Okay, I was I had this really bad disease, and this hospital helped cure me." I mean, that's an example of one. It's maybe two, but here you have proof by the dozens. And that is very, very different, than just having like one person or two people saying, how good it is. So, in statistics, you need at least more than 30 to get a real sample, and this is obviously more than that. So, this just underscores the value and the broad spectrum of users here. We have women, we have older people, we have younger people. So, no matter what their phase in trading, if they're just starting, or their experience, no matter what, their sex, no matter what their age, these people have all found benefits, immediate benefits.
Yeah, and it's it's really impressive. I'm a practitioner. I like to roll up my sleeves and put the trades on, and you guys saw proof that I've done as much as just under $5 million worth of trades in a single year, and that's all well and fine, but how does that translate into helping other traders? And I know Steve's been trusted by the world's traders as well. So anyway, the stock trading success system is now available in a downloadable version. So it's even less. When we launched it years ago, it was $9.75. Now it's just $7.95 because we don't have to ship DVDs by popular request. So you can download the videos of the entire system. We've got it on sale for just $7.95, which is much lower than it should be, but beyond the system. And we've got video previews of every single DVD, so you can see what's there. I know we usually talk about this, the hot seats. This is something.
The hot seat, yeah. Tell me about that, Ken. That's a lot. That was a lot of fun, and and very, very beneficial to the attendees.
Yeah, I got this idea from another industry's coaching seminars, live seminars, so that have like 1,000 people attend. And the hot seat approach is one in which traders would come up and describe their toughest challenge, which you folks may also identify with, like not being able to find entries and exits, or not being able to scan for their trades, or not managing their trade risk appropriately, and what's the fix. And so they would come up one at a time, and it's all captured on video. It's like reality trading TV. They'll tell you the problems, and then we ask the room for ideas from other traders, so that it's not just us helping each other, but all the other traders teaming together. So it's a really nice community type of effort captured on video. So I mean, that's just one of dozens of hours of content that you'll be getting in the system. But we've got good previews here for you guys, and all the frequently asked questions. One thing that you'll be getting when you order, and this is something because we recorded this several years ago, we want to include, I'll be doing a year and a half. I've been doing these now for so many years, every other month for like 8 years now. I've been like clockwork. I've been doing these. You get a year and a half of meeting with me personally online with our other members every 6 to 8 weeks for a full year and a half following your purchase. So that way, and here's the schedule. You can see we've got these uh, bi-monthly mastermind sessions, and so we cover a variety of different techniques, and also open up to Q&A and go over the charts of the members' choice. If there's a chart that you guys would like me to pull up and answer questions on how to apply the stock trading success systems, you get that coverage for a year and a half, and that's unheard of in the industry. Normally, this would be a continuity monthly subscription, but this is all just one price, and you get it all with no monthly cost. So that's included for a year and a half. We also, this is a great idea that Steve had, was if you want to jump down to the bonuses, you can just now click on this link here and it'll ask you like being in a transporter in Star Trek. You instantly get transported to the bottom of the page where you got all the bonuses. So Steve had mentioned these two, and there's also recordings of a quick start guide. And here's a big bonus for the first time in history. And Steve, I wanted to get Steve's input on this too. This is our first seminar we ever did, and we sold out. It was that capacity. They only had one meeting spot left, and it could only hold like 21 people. So that filled up instantly, and we sold out the seminar. And one of our traders captured it at our behest. We gave him, I think it was free admission if he would record this thing on video for us. So it's not a broadcast quality famous videographer, but captured so you can really see every single nuance of this entire, originally called the Samurai Seminar that we did, and then we renamed it the Trader Secrets 7 DVD system. And for years we sold that as a standalone. We had two different systems. This one, the Stock Trading Success System, and the Trader Secrets system. Now, for the first time ever, you're getting them both included in one package. So you get a full 5.5 gigs of seminar video footage, a full 13 hours captured, along with PDFs of all the charts. We still have the PDFs, and there's a handout manual and all that. So you're getting two trading systems for one. We've never offered this before. I held out for this because it's really given away too much. Something this much content, you're getting over 30 hours of training, should be up at $19.97. It should be a $2,000 product, but it's only $795 total for both systems. But Steve, any insights on the Trader Secret system? Because this was our first big home run hit that we sold for many a year to many hundreds of traders around the world, and now it's available for the first time ever. It took me like 26 hours to do the conversion work, but we converted it from DVD to downloadable WMV videos. So in case you're wondering what that looks like in the download area of that system, you'll be able to download the PDFs and the DVDs from the Trader Secret system in a handy WMV video that you can keep forever. So that's, for the first time ever, we're including this as a bonus. So now traders get both of our best-selling systems for one low price, and it's under $1,000, it's under $12.95, it's under $14.95, it's under $19.97 where it should be. It's only $7.95, which was the standalone price for each system. Now we're packing both of them into one package for you at the same price. So, but Steve, any thoughts on Trader Secrets? Because this one was our biggest one we started, and it was the biggest, at the time, the only multi-DVD system in the whole trading industry, and it really caught the trading industry by storm, and we sold hundreds and hundreds of the system to traders around the world. Traders love it. This is another great system.
Right, and think about all the people who attended the session had the travel costs and the hotel, and now all you got to do is just watch it on your computer, and there's a lot of information here, but don't let that overwhelm you. It's broken up into bite-sized pieces. Each chapter and section is titled, so you'll know exactly what that section is all about. And there's a resource you will have forever. So, 1 week you may want to watch one part of it, another week another part. But each section, no matter what you watch, you're going to walk away with a trading strategy that is really going to help you the very next session. You'll say to yourself, and I know the audience said this is, wow, I didn't think of this, or wow, I wish I knew this earlier, or wow, I could have saved a lot of money or made a lot of money if I found out about this before. But now it's in my, my to-do list every day to look for these certain patterns or strategies.
Right. And This is, think about it, folks. For just $7.95, you get a year and a half of coaching webinars with me. It's every other month. Plus, you get 2 entire seminars from Steve Nison and myself. Our only 2 seminars we've ever done, all captured on hours and hours of downloadable video that you can watch instantly. And a couple other bonuses. I got a popular swing trading service called Swing Scans. You get 2 months of that. You also get 2 months of my brand new small cap scan service as well. Plus a $50 Candle Charts Academy gift card bonus all years, when you place your order now. And if we take a look at we've put together a kind of description of this. So the Trader Secret System, this is the first time it's ever been available as a downloadable video. Hundreds and hundreds of traders love the system. They clapped out loud and they stood up, and I remember they cheered us at the end. The guys at the back of the room, they were standing up and clapping and all that at the end of the seminar, now captured on video in addition to the stock trading success system. So this is what you get in terms of hours, over 42 hours. And like Steve said, don't be intimidated by the content. It's all in bite-sized chunks. So you can watch 20 minutes here, 15 minutes there, 30 minutes there, until it all sinks in. So you get the 14 video stock trading success system, that's 17 hours. You get the Trader Secret, it's actually closer to 13 hours. You get follow-up webinars with me, which adds up to 9 hours. It's every other month for a year and a half, so that's 9 hours of content. Plus the bonus training from Steve and Swing Scans 2-month access. So you get over 42 hours. And to put this in numerical terms, for years we had sold the Stock Trading Success System as a standalone at $14.95 and Trader Secrets at $7.95. Now we're compressing all of that down to just $7.95 for both of them. You also get Steve's bonus roundtable, the Nison Trading Principles video, small cap alerts. Normally that's $97 a month, which traders happily pay for my service, and Swing Scans, popular with many traders around the world. And it's a total value of $31.54, now only $7.95. So anyway, it is a really good deal. We want to help you guys go from uncertain to unstoppable, to quote a famous fella, and helping you focus on professional tactics by doing it the right ways is what we get at. So don't take our word for it. Well, you should take our word for it. We're trustworthy, but also take the word of Editor Stocks and Commodities. I've never seen this big praise, and I'm deeply grateful to Janthi for writing this, saying that you'll certainly have gained enough knowledge to trade for a living. I've never seen her write that nice comment for anybody's system, and she's seen tons of systems over the years, plus all the dozens of testimonials from traders out there. So we urge you to register your spot now at stocktradingsuccess.com, and look forward to working with you folks in our upcoming members events. Let me give you a quick inside peek into the members area, because we've got a couple of quick start guides here, the video downloads. You get upcoming webinars, there's tutorial support. We also include PDFs for accompanying every single one of the downloadable videos as well. So, and again, this is all download version now, because people, I don't know if y'all are like me, but I don't look at DVDs anymore. I've got a huge library, and I ended up buying it all again on Amazon for streaming, because I don't feel like opening up the dang case and hunting around for silver discs. So instead, it's all downloadable, and you can download not only the PDFs but the videos and keep them forever on your external hard drive or your computer, whatever. And you can copy it to a notebook or a Kindle or whatever too, if you've got different videos or PDFs that you want to keep for mobile access as well. So it comes with all the PDFs, and in the members area you get all these videos. Set aside some time to download it, because it's a huge system. You may just want to download one file at a time until you get there, and you'll get all 14 DVDs plus 7. So that's 21 DVDs total in downloadable version, and it's available for you right now at stocktradingsuccess.com. So let me see, Steve, any other thoughts? I know you've done a really good job of explaining the reasons why this, why now. We do ask that you give us 24 hours after you order to get your login information, because we have to set up individual login and password. It'll be like your first name and last initial, and then some random password. So we set those up individually, one at a time for you. You get a whole library of videos to learn from, plus ongoing webinar support with me for a year and a half. Because I take it seriously. I want you guys to also be I want you to add your success story to all the hundreds that we've gotten already, or the over 100 I should say we've gotten already. And so to do that, I like to give you preview videos and also a year and a half of trader coaching support so you can get answers to your questions. And again, this I put together a schedule here for you, and you can see we've already got our 2018 date scheduled. You'll get access for a full year and a half of bi-monthly webinars where you can bring your questions and get answers and updated strategies to extend the knowledge that you've gotten in the main stock trading success system. But lots of bonuses, lots here. It is on sale now until October 26th. So you get a week from today. So you can think about it, over the weekend or whatever. But do get your orders in by October 26th. It's a great deal. I never extend the deadline. So that's a hard deadline. We're not going to say the server broke, you got another couple days. I don't do that. You'll see a congratulations to all the smart traders who ordered graphic, like I've been posted for years. And that's it. So you got a whole week to make up your mind. But do check out the bonuses. Look at the preview videos. And we urge you to take action in order stock trading success today. Steve, any thoughts before we wrap up?
Yeah, this is something, it's a one-time investment. It's, what's the expression, return on investment, ROI. So this is something you will have for the rest of your trading career. And it's timeless. These strategies are timeless. It won't matter if you start using them, next week after you look at the videos, or 2 years from now. They're there. They'll always go back and review as needed and implement the strategies. But once you invest in them, it's a one-time investment, and you'll have them forever.
Yeah, and you have our word. It's a great system. We put a lot of work into this, and it's our 2 live seminars captured on video, good for both swing and intraday trading. It's, I would say, primarily maybe 60-70% swing trading, 30% intraday. So no matter what kind of trader you are, and no matter what your previous experience is, if you're a new trader and you've only been trading a couple of years, or you've been trading for 20 odd years, or since the dawn of time, like many of our traders, you'll get a lot out of it because we cover both basic and advanced, mostly intermediate advanced content. By the way, just so you know, there is some basics in the first seminar videos, but the main content is really advanced, specific strategies. And again, for the best message as to why this, why now, and what it can do for you, we urge you to take a careful, honest look at the trader testimonials, because that really explains what other people got out of it. And I think that kind of like reviews, like whenever I buy something on Amazon, I look at the reviews and I like to see what the crowd says about something before I pull the trigger on a purchase, or movie, or a piece of equipment or whatnot. And you can see here we've got lots and lots of over 100 positive testimonials. So really proud to have been doing this with Steve, and wanted to thank all of you for being here. And thanks so much, Steve Nison, for joining us in tonight's event.
Okay, and thank you for having me.
All right, so order now at stocktradingsuccess.com. Do give us 24 hours. We always get a flood of orders come in, and it takes a little while to get everything set up. So do please be patient. Give us 12 to 24 hours to get your personal login and password. So take action and order now at www.stocktradingsuccess.com. So until next time, trade smart, trade with real tight stops, try and make as much as you can in your trades, and let's go get them. Thanks so much. And thanks, Steve Nison, for being here tonight.